Pecha Kucha on the consequences of the economic crisis, created by Karishma. GDP is the amount of total goods purchased in the country. If the economy is at a good state of GDP, the supply and demand curves are equivalent, which results in producers producing and consumers purchasing goods. The issue in the United States is that a majority of these goods are purchased with credit cards. Anywhere you go, whether it be a grocery store or a restaurant with your friends, the majority of people pay with credit cards. It has become less common to pay with cash on hand. According to the Federal Reserve, the debt has accumulated to $2.45 trillion. This accumulated credit has created an artificial GDP for the nation. This, in turn, creates a domino effect, starting with bankruptcy with lenders and then credit card companies suffering losses as well as consumers. This led to companies filing for bankruptcy, which led to layoffs and job cuts, or in other words, unemployment. Unemployment is man willing to work but unable to find work. An economic recession happens for many reasons. One of the main consequences is the effects of the unemployment claims. This leads to many people filing for unemployment compensation. There are pros and cons to this. A pro to this is that people that are unemployed have money to survive. A con is that there are going to be people that file for unemployment as a source of income. President Obama passed an extension of the unemployment bill, also known as the Unemployment Compensation Extension Act of 2010. This bill cost $33 billion. The minimum wage rate is so near to the unemployment compensation that it gives people looking for work the incentive to not work and just file for compensation. The minimum wage as of right now is $7.25. The unemployment compensation that one receives depends on the amount that the person earned while working. Eligibility of the compensation varies from state to state. Of course, there are going to be people who try to live off the unemployment compensation, but that is not possible for long due to the requirements the unemployment compensation has. The unemployment rate of the United States right now is around 9.6%. This rate is a measure of the effect of the recession. The Federal Reserve determines the health of the economy when setting the monetary policy using the unemployment rate. Investors also look into the rates to see which jobs are losing. This helps them determine where they want to sell their funds. When unemployment starts to fall, it does so steadily. This is because companies are reluctant to hire workers after a recession. This is seen in 2002 with the recession ending with an unemployment rate of 5.6%, then in 2003 the rate is 6%. Real estate. From the 1990s to 2000, the real estate sector of the economy was significantly well off. The real estate rate had risen by 124%. After 2000, the following areas caused banking companies severe losses: reckless lending, refinancing, second mortgages, and unnecessary price appraisals. The amount of foreclosures increased and the property value declined. This led to homeowners owning more than what their property was worth. Banks and other financial institutions started filing for bankruptcy. Companies that were associated with the banks also had an increase in layoffs. This is an issue referred to as the subprime mortgage crisis. This also added to the amount of unemployed persons in the economy.